Okay, welcome everyone. I'm going to do a video today. We're going to run through technical analysis of gold mining stocks, and silver, and we'll look at a couple silver mining stocks. Anybody that's been part of my channel for a while has known that I follow these mining stocks pretty regularly. I haven't been covering them quite as much in the last little bit because gold wasn't really doing anything. So we'll look at kind of what's going on with gold. We had a little bit of a breakout, it looks like, so I want to start keying in on these mining stocks a little bit more. These, previously were really great trades, and I was able to capture, really big kind of doubles on a lot of these mining stocks. So if that's going to continue, we want to be a part of it. So let's go ahead and dig into these charts. Leave me a thumbs up if you guys are new, and I do appreciate that. All right, we're going to start out here with gold bullion. Gold bullion, I marked this big basing pattern out. When this is we're looking at a daily chart here, but this basically goes all the way back to 2013. And I pointed this out in my previous videos. I just want to touch up on it. This was a rounding bottom, and that's a pattern basically that is a consolidation pattern. It just tells you ultimately that gold isn't a big bottoming pattern or a big basing pattern, and it's not really going to go much lower. It's going to, break out to the upside, and it did. So there's your breakout in 2019. This breakout actually occurred really, I think, prior to the Fed raising interest rates or cutting interest rates when they were doing that repo stuff back in 2019 and right around there. So gold broke out, and so what I've got marked out now is a longer term bull market in gold bullion. You can see right here in the red, this is what I'm going to consider the trend line for the bull market. Now we did just tag it recently, so as I zoom in, we did just tag it. I was looking for a little more downside. I was looking for an undercut of this trend line and then a recovery, maybe an intraday dump down to 1790 and then a recovery. Doesn't look like we're going to get that. So that is, as of right now, looks like we have another move higher in what I'm considering a longer term bull market in gold. So let's narrow it down to the hourly here and see what we got going on. Okay, so as I scroll out on the hourly, you can see we were basically creating this big downward. We had a downtrend really going all the way back to August of this year, and we were just continuing to walk down the downtrend. And finally it broke out though right here. So that's a breakout, and what I would expect now is a back test. We come down, something like this, come down and tag that, and then from there bounce off of that and move higher, something like that. So I'm going to be watching for that. Doesn't mean I'm going to get it, but that is what I'd be looking for. So we do have a breakout as of right now. And if you look on gold, if I go to the daily here, you'll see that we did have bullish divergence right there. There's your bullish divergence where the momentum was moving higher right there, and yet we made a slightly new, it's about an equal low really right there, but momentum was moving higher. So that was signaling that there was some bullish momentum starting to build. And then you look for our break in trend. Now here's your break in trend. Your trend line's right there. You broke to the upside. Nice bullish candle. Looks good. Ultimately everything's there to confirm that this is a bullish breakout. So what I'll be looking for is a back test and, a back test and then a move higher. Now, if we if we come in for this back test and we end up breaking and we break this support line right here, then I would expect we'll get that test to 1790. Again, I don't know which way it's going to go. As of right now, everything looks bullish to me. So I'm looking for back test as a potential area to start to go long. Let's look at some of these gold miners. Oh, and before we do that, though, we need to look at the dollar. So the dollar had a pretty bad week this week. If I go to the weekly, you can see it's just all selling right there, really making a new close, a lower close on the weekly chart right there, closing below these previous lows. If I go to the daily here, you can see we're breaking, this line right here was kind of the support, 92.68. We broke below. So to me, the dollar looks bearish as of right now. Now we do potentially still have bullish divergence in the dollar. You can see if we make a new lower low anytime soon and then turn up, turn back higher, then that will be a bullish divergence right there. So it's a potential. It's not, it's not confirmed, but it's a potential. So if the dollar wants to go and make a little bit more, slightly lower lows, maybe undercut this 91.72, or really just undercut 92.17 and close would be a lower low. If it wants to do that soon and then reverse and head higher, then we'll have bullish divergence on the daily chart in the dollar. And keep in mind, it's not really that we will have the divergence. We've had the divergence. It will be just extended. There was bullish divergence right here. And you can see, if I move that up, you can see right there, we were moving higher in the momentum as price was moving lower. So we had bullish divergence. We got a reaction. We got to move higher. It just wasn't. It's just not a very large reaction. It's not as big as you would expect with a bullish divergence on the daily. So perhaps we're going to extend the bullish divergence now, which would be something like that. Make a new lower low, and then turn and go higher. I'm just saying hypotheticals, but it could do that. So we'll watch for that. And if that happens, that will be a cue that the dollar is going to probably go much higher, and then we'll look for correlated trades around that. Okay, gold miners, Barrick Gold. We'll start off with Barrick Gold. So I cleaned up my chart a little bit, and Barrick Gold, I don't see anything in this chart that tells me Barrick Gold is going to be uber bullish or anything like that. I mean, ultimately what I see is negative divergence right here on the daily chart in the RSI, and it's just continuing. You can see right there, it's just kind of a continuation of the negative divergence. Now, if we move up and make a new slightly higher high shortly or soon, and then turn down, it will continue this bearish divergence. I don't see bullish, I don't see a bullish divergence. I don't see bullish momentum really in the RSI. Ultimately, what I see is just a continuation of the bearish divergence. So even though we moved up this week, to me it looks like we're just in this sideways range that it's been in since going back in April. This is where I sold my Barrick Gold, right back here, really on this day, April 23rd. I sold that, and it really wasn't a bad move because this thing's really only gone marginally higher, and it's just chopped around sideways for quite some time. So I don't see anything that tells me it's breaking out. Now, we'll watch, if we get a slight break higher anytime soon, watch for that, because if that reverses, that's a continuation of the bearish divergence. And it might do that. Agnico Eagle, this is another one that I like. One of the reasons why I like Barrick Gold, just to cover this real quick, I like Barrick Gold because it's not indexed in the S&P 500. Typically, gold rises on market weakness. Obviously, you can see gold rising on anticipation of inflation, and maybe the market will rise with it. But if you get big liquidity events where the market's selling off, and you do finally get that rush to safety, gold will catch a bid, and those miners should do well as well. So I don't want a mining stock that's indexed in the S&P 500, because there's been a lot of rush to passive investing over the last 10 years. So if you get a liquidation event, those passive funds sell, and they'll be selling those miners that are indexed in the S&P 500, even though the miners might be a good, the rest of the miners might be moving higher. So that's really the reason. And then Barrick Gold's one of the major miners, so it's kind of a proxy play on gold with some leverage, but not too much leverage, obviously. We like to mitigate risk on this channel. AEM. All right, so what do I see here? I see bearish divergence right here. You can see, and it's kind of been extended slightly, but basically this was your bearish divergence right here. See how we made this new higher peak, this new higher high right here, and yet we did it on lower momentum. That was when the bearish divergence was in play. And so that's really it, and it's just kind of chopped sideways, and so we don't have anything that's changed from that posture. You know, there's still just bearish divergence in play. Doesn't mean it has to play out for, you know, for a sell-off or a breakdown, but it puts the probability that it will. Zooming in, AEM hasn't really gone above its August highs too much either. It's just been, this is just a big sideways chop zone with a couple breaks higher, a couple breaks lower, just chopping people out. Rolling out, you had major resistance right back here in January of 2011, which that's the level I have marked out, and that's really where we've topped out at. So a decisive break above 87.80. Look for volume to come in on that breakout, and ideally what I'd like to see is this come down a little bit, put in some sort of a bullish divergence, then break higher and break above this high with some volume. That would be the cleanest setup, but again, we might not get that. So what I'd be looking for is a break above this 87.90 area, decisive break, nice bullish candle, the bigger the better, with volume. That would confirm a nice breakout, and then you look for back tests to start building positions or to add to a position. Until then, that bearish divergence is still intact, telling me that we're probably going to go down. But we need to, you know, we can run up and make a slight break of this high, but if it's not impulsive and bullet and you know, with volume, then look for that to be a divergent high. It will turn down there, and it will get a big move to the downside. Newmont Mining. Let's take a look at this one. Newmont has a large bearish divergence right here. You can see it where you had ultimate momentum and max enthusiasm back here, and then we continued higher, making lower highs. So we'll see. You know, we'll see if this turns down, but I don't see anything else, any smaller divergences within this kind of whole price range right here. So I'm, you know, it continues to look. Yeah, I guess you had a little bit of a divergence right here. I didn't see it at first. You had it right there. Slight bearish divergence right there. And that played out for a drop. You got the sell-off right there. So I don't think that's relevant anymore, but I did want to point it out. So we have a large bearish divergence. This can obviously get burned through. If we go high, you know, if we keep going higher, we can burn through that. So again, if the momentum's heading up and the RSI is moving up, you don't get confirmation until after it turns down. And usually you want to see the PPO do a crossover where the lines cross to the downside. Here's your all-time highs on Newmont going back right about there. So I would think that is, you know, that's capped us basically as resistance. So again, same story, an impulsive break above that with volume, preferably burning through the bearish divergences. That would be the bullish, you know, that would be your bullish signal that most likely is going to signal the next major leg or trend higher in these miners. Here's Franco-Nevada FNV. So I see some bullish divergence on this one. You can see it right there where momentum's starting to build, and yet it kept making lower and lower prices. That's now started to already play out for an impulsive break higher. Zeroing it in on the hourly chart, there's your breakout above this downward resistance. So this is everything I'd want to see for a bullish play. The breakout's already occurred though. Typically you want to grab it down near the breakout. So I'd be looking for back tests on this. If it back tests, that might be a good spot to start building a position or adding to a position. Key resistance levels, well, you can see we got one right about there. Which is basically where it closed at. So I would, you know, that would be a profit target. The trade's already, you know, I didn't catch this trade obviously, but it ran right into the key resistance level, so likely to get a reaction there. Maybe we get that pullback all the way down here. Maybe it chops around a little while and then does a full pullback, backtesting somewhere down around here, and also putting in a new divergent low. That would be the most bullish area to, or the most objective area to go long on this thing. But as of right now, hit the key resistance, reaction's likely, probably going to get a pullback. And then you've got the high up here as the next target, right up there, which is sitting around 160. Let's see, 166.64. Here's Yamana Gold, AUY. Negative divergence on the daily was really right back here, where you can see we made a lower high in momentum and a higher high in price. That sets us up for a pullback, and you did get the pullback. It fell about 25%. So we'll see. But as of right now, the negative divergence, negative momentum, I guess, has continued. If we're going to run up and make a new higher high anytime soon, and then turn around, it will just continue the negative divergence. So a lot of these gold miners, I'm just not seeing extremely bullish setups. I just don't see it there yet. We haven't gotten that kind of move. Usually you want to see prices moving down, then you get a bullish divergence, and that sets up the next move higher, because it catches all the shorts off guard, and you get a short squeeze, and it pushes the stock higher. I just don't see that. So that Franco-Nevada one was bullish, but the rest of these just aren't really coming up as bullish setups yet. So we'll see. That's why gold, this breakout, going back to gold, might fail. This might be a false breakout. It doesn't have to be. It clearly looks bullish to me right now. We have divergence, bullish divergence on gold. So maybe the miners are now going to follow, but they just don't have the technical setups right now. Here's SOV, silver ETF. And I just don't see anything in this chart. Right now, I see, we had up here kind of a slightly equal high, and that we have made a new higher price. So potential divergence, and it did play out. You got a big drop right here. Now we have, bullish momentum. There's no divergence though, because you can see momentum's moving higher, price is also moving higher here. So price is doing what the momentum's expecting, and there was no real divergence that was signaled during this bullish move higher. So right now I just see when this thing's showing it's going down, the price goes down. When the momentum says up, the price goes up. That's really all I'm seeing. We do have these two gaps down here, and I have them marked out, 1983 and 1856. Those gaps, I am expecting those gaps to get filled sometime. I don't know when though. Nobody knows when. It could be on the next bear market in silver. So we're watching that. There's also a gap you can see way back here. This gap was probably filled, but there's a gap going back at 25.19. We'll mark that out. I suspect it was filled. Yep, it was. So it was filled right there. And that's basically why this was held as resistance up here. So we're going to have to continue to watch to see where this thing wants to go. Because as of right now, I just see, I don't see anything in the chart. One thing to mark before I leave, potential uptrend line in silver. You can see on this daily chart, we had reactions here, reactions all through here. And then we broke out, but then we broke down and we back tested from below, just chopped around that trend line. We finally broke. It looks like this could be coming up for another back test. So that's a potential. As of right now, I would probably play that in this manner. I just don't see any breakouts or anything telling me that silver is just going to run too much higher, but it could obviously run up and get rejected at this resistance line. So it's questionable. Pan American Silver, silver miner here. You had negative divergence start right there. You can see it. And then it continued, because right here is where you put it in. You made a new higher high on price, and momentum was slightly lower. And then you also had another negative divergence really start to build right here where the momentum started to roll over, and yet price was continuing right in this moment. That was a divergent high right there. Now it did play out for a drop. You know, we did get a drop in this thing of about, well, in total, 25%. So it has played out for, you know, for a sizable correction. So maybe that's it. Maybe now it's time to see what else we got going on. We do have some bullish momentum here, and it looks like that was a divergent low. Yep, it was right here. So this was a slightly lower low right there, marginal low, and you had that was a divergent low, and now you're, you know, getting the move higher. So again, we'll just have to see where this move ends. You know, again, I just don't have a good read on these things right now, but this could extend this divergence if it wants to run up and make a new slightly higher high anytime soon and then turn down. That would be a divergent high, and maybe, you know, maybe this wants to have another move down, potentially down to this 25 or 26 area. So we'll watch that. First Majestic. This one looks more bullish. You can see here negative or positive bullish divergence here on the daily chart. Started to build bullish divergence right there while prices were continuing to make slightly new lower lows right in this area. Then we started to get the move up, and the trend line that I have marked out, if I go to the hourly, we can tighten this up slightly. Yeah, probably right in there. So there's your downward trend line right there. You broke. Looks like they did a fake out move. Actually, it broke above, came back down below the trend line, but then gapped up, showing you that's an impulsive breakout. It gapped and ran higher. So, yep, that's a breakout in this thing. So what I would be looking for, I'm not sure if you're going to get it, but is pullbacks to the trend line. That looks like objective areas to go long. Price targets on this thing, well, you've got some resistance right there. So slightly higher. You also have a gap up here that has not been filled yet. So the gap fill is probably the most likely target for the first reaction, which is up here around 1293. I'm not interested in buying this thing here, but obviously it's a 10% move higher to that gap. But I would be more interested in buying it down along this support line right here. And then we'll look to the highs all the way up here at 14, you know, about 1450. That's all I got, guys, for this video. Thank you. If you guys are new, leave me that thumbs up. If you guys are interested in learning how to do this, how to analyze charts, how to you know, manage risk, manage position sizing, take my training course. That's in the description below. You'll see the link right there. It's on $99.99, so just 99 bucks basically. I kept it cheap for everyone, so. And I'll catch you guys on the next one. Bye.